Hey guys, thanks for tuning in. It's February 6th, Wednesday. We're going to be going over the day trades in this episode that I took on my paper trading account for the simulated trading, which I'm still doing for the next this week. And we're going over. I took three trades today on two different stocks, EA and Snap. So that's the EA Sports and Snapchat. And for those of you guys who don't know, I choose my stocks based on how they're moving in pre-market or after market. So if they're, I look for stocks that are gapping up or gapping down, which means on the 4 hour chart here, you can see the stock has moved in the pre-market and post-market hours. It has gapped down. If we go to a 1 hour or 1 day, you can't see any of these red because it's a 1 day time frame, and the last chart was 4 hours, so you can see the 4 hour time frame, you can see the move down, but on the 1 day you can't. So that's one of the reasons it's called a gapper. So the reason we like to play these is because they've already made a big move and they're going to continue to move in one direction or the other, and whatever move they make will be bigger than any stock would make under normal conditions. So if you look for these and trade these every day, in theory, you will gain more money over time. All right, so with that covered, we are going to look at, so we're going to talk about what I was looking at coming into this trade. So it was gapping down, and what I do is I marked off the next level of possible support that I thought it had, which would be back here, and I don't know even when this was, late late December, and so I marked off two levels down there, and this is also actually that's where it also touched pre-market. So I marked that level off, and I marked this level off here because it had sold off to here and stopped, and then it had started at that level and sold all the way off down. So sometimes that can be significant. It can mean something. And I also marked off right below that on this wick where the price was, but then it got bought up to this level. So I marked the low and the close of this candle and the open of this candle. And as you can see, we ended up touching these and selling off throughout the day. And what I had written down in the morning, because you always, guys, this is for the main thing you got to focus on if you're a beginner in trading stocks, you got to have a plan. That's the main thing. You got to have an entry plan and an exit plan. So before any of this action here even took place, the screen is blank. You have no idea what's going to happen. I write down, I look for a retracement to 8140 to the 82 area. Now, retracement is just a pullback. It's if a stock is going up, the retracement would be down back to towards the previous price. In this case, a retracement is going up. And I look for these levels because that I'm looking for an entry point that gives me a good risk to reward level. So if I'm looking to short, typically if I'm looking to short a stock, I will wait for it to pull back to one of these levels. And the reason I thought this was because this stock had missed on its earnings. If you look down here, it was estimated earnings $1.09, $1.90, and they got 86 cents actual earnings. So I expected long-term buyers to buy this up and then it to sell off again, and for because that what it can do multiple different things, but for this scenario, that's what I was thinking. So I marked these levels off for my entry points. Now let's get into what happened on the 1 minute time frame. Show my trades. So we can see the price was grinding up towards my entry level in pre-market. And actually at the very open, it shot up on the first candle to $81. And $81, and my first entry point was right here. And I literally was making a move to buy it. I didn't have the right layout on the I didn't have the order box ready, and I was going to buy it on this first minute. This is the first couple seconds the market opens, and I was gonna buy it and short it down, and if I had done that, I would have made a massive gain, but I would have had to um I would have gotten I wouldn't have been able to hold because I would have been eventually gotten shook out. So that's the thing, guys. I'm not ready for these entries. I'm starting to realize that this stuff all happens too quick, and yeah, I've gotten in sometimes, but I still need to learn, and I've been having bad luck today or the past couple of days, and I'm gonna start waiting until my entry point shows, like I talked about yesterday. But so let's just get into this trade specifically and break it down what I did. So after it made this massive move up and got near you, and guys, these entry levels, you don't always. I'm not gonna always wait for it to hit it perfectly. A lot of times they'll go over it. A lot of times they won't quite hit it. And a lot of times they'll hit it perfectly. But you never know, and you got to judge. You're watching different things. You're watching the time and sales and the level too, and the orders go through to try to help you figure that out. But you never really know for sure. Now, so my entry, I after it made this massive move and came back up, I basically the whole thing with all this, why it makes it so hard, guys, is your emotions. All this is happening, and you feel like you're gonna miss out and lose money, or you feel like you're gonna fail, and that's another reason why you have to put in your entry and exit points because that takes the emotion out of it. But it's still it's still hard to execute with that. Now, I've thought about putting in limit orders and stop orders and stuff like that to automatically buy and sell, and I do that very seldomly because you'll miss a lot of moves like that as well. And I like to kind of feel the market out and choose my entry point in the time a little bit. Now, that being said, I might need to start setting stop and limit stop orders so that I can automatically get my entries and exits and set them out pre-market. Problem with that is you have to, if you want to actually do a buy at a different level, then you have to go in and take that order off and then place your market order. So it slows things down and it gets in the way. Now, so after I missed this big move, I'm getting a short right here. Now, my entry level was supposed to be up here. So yeah, on the first candle, a massive push up when you know the stock is gapping down on bad news. That's a short right there. When you take in the first couple of minutes, you get massive moves, but you need to be prepared to lock it in and not go all the way down to my profit target, which my first profit target was here. If I would have tried to hold, I would have gotten, I would have, that wouldn't have, if I would have needed to cover down here or down here on this green candle, or maybe on this green candle I have to put in a second bottom. But anyhow, I missed that move, so I'm getting FOMO, fear of missing out, guys, and I short right here where I already said my safe entry point was up here. So now my stop loss needs to be up here, but I'm setting my stop loss lower because I can't lose that much money. So I'm reducing my chances of winning. And I shook out on this candle. And I lost $84. So guys, I need to, if you miss it, you miss it, move on. As we can see, if we scroll down, it did end up touching my level, and I could have shorted right here. I could have shorted from 81.39, 81.40. It touched it perfectly, the level I had. And then it went all the way down to 81.26. So that's $1.14. 100 shares, that would have been $114. 200 shares, that would have been $228. Just on that little move. But it didn't do what I want. It kind of a lot of times it'll come hit a level like this and then go all the way back down to pass this level or retest this level, which it didn't do. It has a lot of support. People like the stock right now, and it could continue down tomorrow. Now let's go to the next trade, which is on Snap. All right, so I took two different trades on Snap. I Snapchat coming into pre-market, same thing except for it was gapping up. It was gapping up, and I marked off these two levels. I marked off these two levels, this red line. Sorry guys, let me just. So I marked off this red line here where the price had hit before, and I marked off the bottom right here where the price had hit, and it was also close to where, sorry. So it hadn't gotten there pre-market, but it ended up playing around with those levels during the day. Now that's the $9 level, and this is why I marked that level off, because it's a whole number, and when a stock's down under $10, or any stock in general, but mostly a smaller stock with less value, like $10 or $20 and less, especially $10 and under, they react really they react well with whole numbers and half numbers, but mostly whole numbers. So if it gets to the $9 level, it's like you can read it and try to detect whether it's going to bounce off or shoot through. Because once it reacts with those levels, the volatility goes up, and you can get big moves. And look for good places for reversal. So I in my thesis, I had looked back at this stock, and I had realized that every time, this is Snapchat, every time, look at here, every time it gaps up, it gets sold off. So pre-market, I was going back, and I was looking, I went to the 1 year, I think. So pre-market, I was going back and looking, and you can see it sells off a lot. I don't remember the time frame I was on, but just right here, I mean, just in this chart alone, you can see it jumped up and sold off. I mean, here's another example. Shot up, sold off, same day. Came up, sold right back down. Okay, came up, sold right back down. All right, so that's why in my thesis I had written down that I was going to look for an entry at $9 and short it from there back down, looking for it to actually completely engulf this candle and go down like it has been. Because even though they did have an earnings beat, they still were just under break even on the quarter, so they lost 4 cents a share. But it is better than their estimated 74 cents. Now, so that being said, I was looking for a short down to my first profit target of $8.40, and then I was going to cover some and look for a continuation down. Now, let's go and look at the 1 minute and see what happens. So we zoom in here. We can see that the stock came up to, didn't quite hit the $9 level, but it came up and it went to it got to 889. Sorry, not 889. It got to 895, and I saw it coming down, and I thought this would be a good entry at 889. That's a 6 cent stop loss, because my stop loss would be right here at this level on that yellow line. So I took 100 shares there, and I should have taken more. I should have taken a lot more, and because it's only a $10 stock, and if I would have taken more, I probably would have covered up down here. But I didn't. I didn't. I held through this. I held through this pullback. I added another 100 here, and I held through all this because my profit target wasn't down to 840. I added another 200 here, and it didn't actually ever reach my profit target, and I stopped out here on this candle when it broke over the high of my second entry, and I stopped out, and I had a $22 win on that play. Then I entered short. I'll go up again here because I saw resistance. I was anticipating a breakdown of the highs over here, so I shorted 300 here, and I shorted another 200 here, and I ended up getting shook out right here, and I stopped out here, and that was a $20 loss. So all in all, $2 win on this. Now that brought me to minus $82 for the day. Alright, guys, stay tuned for the next episode today where I cover my swing trades, and that's real money, and that was better today. I had some good plays, so stay tuned for that. And let me know if you have any questions in the comments.